What's going on, guys? It's GBP baby. Welcome back to another weekly review and forecast. I hope everybody's doing well, and let's get straight into things. So I'm going to start by looking at the economic calendar. Personally, I use my FX book for the calendar just because I like their layout and whatnot. And you'll see that Tuesday, Wednesday, Thursday and Friday all have very high impact news events, with non-farm payroll to finish on the Friday, which should be quite exciting. So generally it appears that every day, well, Tuesday through Friday does look like there should be events that will occur that will allow us to trade. However, based off the market conditions and where we're at currently, it does seem very low probability with the start of the week, and you'll see that once we get into the charts. But it's just important to take note that we do have, high impact news on the Tuesday right through Friday, with non-farm payroll and jobless claims on Thursday and Friday, which tend to move the market quite a lot based off what I've seen in general. Also, one thing to take note of is the times. This is something I need to get better at. This is currently in GMT. Let's just quickly make this New York time. I'll figure out how to. Like so. And now that we have our time in Eastern Standard, you can see the times that it's going to appear in our charts, because remember, we should set our charts to New York time. So our first event is going to be first high impact news event will be 9:45 New York time on Tuesday, with everything else from Thursday onwards being 8:30. So definitely something to take note of, and we know that we can start plotting these times in our charts once we put our daily dividers in, just so that we know when to expect movement and to see if it offers us any setups. So now let's get into the actual charts themselves, and I am going to start on the monthly, as we've now started a new month of March. This year's flying by, and yeah, we can see that we've already started on Friday. But what I'm going to do is I'm going to be marking PD arrays above the market and below the market, and what that means is above current price and below current price, just to see where price will likely be drawing to. Now, in the previous video I did bring up the seasonal tendencies, and we saw that March generally does tend to be a down month on the dollar. However, there is usually some kind of rally to start off with, so that's something to consider. I don't know how applicable it's going to be, especially like I said in these world conditions and such, but regardless, let's just get straight into it. So we can see that we have this bearish order block on the monthly, which I've had my eyes set on for quite a while now, if you've been watching my videos. So I'm going to get that delineated as a monthly bearish order block, and I would like to think that price will want to draw to it still in this month, but honestly I think I'm going to have to give the month a little bit of a, maybe the first week before we start to frame the rest of the month. And then we also have this bullish order block right here, the opening of that, which is going to be significant as well. Remember, the high, opening, low and close of candles are the most sensitive parts of them. So that's why I'm going to mark the opening specifically, because we haven't traded to it since last month. Also, the high has already been traded to, so we don't really need to look at that. So right now I'm going to be looking at this open. So let's just get that delineated like so, and we'll put monthly bullish order block open, and we'll make that black. And another thing to take note of as well, but I'm not going to mark it out, is the fact that there is actually a volume imbalance here, and price has delivered through on the upside, meaning that this should provide support anyway, because it should act as like an inversion fair value gap in the way that it should provide support. But yeah, those are pretty much the two levels I have my eye set on moving into this month in general. I want to see how price treats this bullish order block opening and this and see whether price does want to draw up to this bearish order block over here. If price does trade through this, the lowest I'd expect it to then trade will be the mean threshold, and the mean threshold of this, we can just get that delineated, is right here. So it's going to be the midpoint, so we can get that marked out as well, because like I said, if price does want to trade into it, the very lowest I'd want to see it respect will be this, before changing my overall bias on this time frame with an expectation to trade lower. But remember, this is the monthly. It's going to take a long time to form, so I don't want to get too caught up on this time frame. Let's go down to the weekly, and you'll see again that monthly bearish order block right here lines up with pretty much the midpoint of this massive weekly bearish order block, and then we have this monthly bullish order block open as well. Now over here, right in these three candles, this is what you call an implied fair value gap. The reason it's an implied fair value gap is because there's only been deliverance on the upside. Well, we can only see deliverance on the upside. For example, this up close candle, and then this wick ended up closing higher as well. So this is an implied fair value gap. ICT has only spoke about this once or twice in his videos, so I don't want to speak too much on it because he hasn't spoke too much on it, and the reason I'm able to identify them is through my back testing. But I do know that price may trade into this and will treat it as a fair value gap the same way it treats any other one. So this is an implied fair value gap, and again, price may want to draw into that before we see price potentially turning around and running towards that monthly bearish order block high. Another thing on the weekly that I want to bring our attention to is going to be this long wick right here. Of course, I'm going to look at the midpoint. That's what we call consequent encroachment. So let's just get that marked out, 626, and I'm going to write weekly consequent encroachment. Ooh. Like so. So in terms of moving into the new week, what we need to figure out is, do we want to see an up close week or a down close week? Generally speaking, I would like to see a down close week, but with the amount of news and non-farm payroll on the Friday, I wouldn't be surprised if it was, quite a messy week in general. But if we're anticipating a down close week, and the reason I anticipate a down close week is because I want to see this implied fair value gap get traded to, then we need to start thinking about what is the highest we want to see price trade and the lowest we want to see price trade. Now what you'll find is we do have this nice bearish order block here. Specifically, the volume of it is what I'm going to draw out, because like I said, price should respect that if we are to be seeing bearish prices for the rest of the week. But like I said, when we drop down to the daily and the hourly and 4 hour, you'll see how consolidated and how ugly price action has been in general, which is why I'm probably not going to be touching the charts Monday and Tuesday, just because I want to give it a chance to catch itself. Last week was disgusting in terms of delivery. Although we were pretty accurate, it wasn't the best, and because of that, I am going to be very cautious going into this new week. But other than that, we've got the bearish order block, weekly order block right here. So again, I'd like to think that we can find resistance there if we are going to be trading into the implied fair value gap and into that monthly bullish order block open. Now don't get me wrong, if price trades through that, so be it, and then we can start looking for the weekly consequent encroachment and potentially this high to get reached. So it's not the end of the world if it doesn't do as we're anticipating. That's another thing I need to make clear to you guys. It's not about getting it right, it's just about understanding general direction. And from the weekly, we can see that we have this implied fair value gap down here. We've had downwards price action, and we've taken out buy stops. So expecting a down week is not, is not out of the ordinary. We can also look at the midpoint of this, and you'll see that the midpoint of that wick lines up with that weekly bearish order block. So I'm going to get that marked out for us as well, as like I said, in the new week, price may refer to that, and we'll see how price treats it in the new week. So let's now go to the daily, and you can see last week's price action. If you watched last week's videos, you know that I was anticipating price trade higher. I had a close eye on this value imbalance to get traded to, but that's not what happened. You can see we traded lower. We've taken out bearish order blocks here, and we could start looking at this down close candle as a breaker. High, low, higher high, and price is delivered to the downside, right? Meaning that this down close candle may be acting as a breaker now, and we're seeing it treat it as so with Friday's price action and us closing lower. So that's something to consider. And again, our implied fair value gap residing below here, very beautiful, nice swing. Nice swing low just below here. So there's going to be what below there? Sell stops and sell side liquidity, and we have this bullish order block. What I'm going to bring our attention to on this bullish order block is going to be the midpoint. Now you can see we traded to it on the Thursday. However, price may want to trade back down there again and grab those stops, which is completely fine. Also, if you look at the volume of the block and the midpoint, you'll see that lines up with the low of the implied fair value gap. So I'm not going to draw all of this out just because we already have the implied fair value gap from the weekly on there. But generally speaking, I am watching these levels to get traded to in the new week. And like I said, we have taken out stops. We've taken out stops 3 times up here. That's something to consider as well. We took out buy stops here, and then on the Friday we took out buy stops again here and got rejected away. So anticipating lower prices into this implied fair value gap is is reasonable. Furthermore, depending on how quick we reach this implied fair value gap, for example, if say Monday and Tuesday manages to reach down here, then we can probably expect a midweek reversal for us to trade higher for the rest of the week. So again, it's really dependent on how Monday and Tuesday are going to be trading this week. Let's go to the 4 hour, and you can see how disgusting price action has been. Here's that high that got taken, here's that high that got taken again, and then we had a nice break in market structure on the Friday, looking like we're going to continue to the downside. We have some sell stops below here and here, so there's going to be sell side liquidity residing below here, and again that fair value gap. I keep bringing our attention to that. So what am I expecting moving into the new week? Overall, I'd just like to think that we can see a continuation lower, and then I want to see how price acts once it does reach this level. Do we get a nice reversal? If so, we can start looking for longs into these highs. Other than that, price, if anything, if it trades through it, then we should see this level be acted as resistance and for us to start pushing for lower prices. So that's pretty much my expectations on dollar. Let's just go to the hourly. Again, clear break in market structure. There is a breaker here. Why? We got a high, we have a low, and we have a higher high, and then price is broken to the downside. So in terms of looking for setups, we can draw this candle out, and when price does return to this level, we know that we can be looking for shorts on dollar and longs on our pairs, because it should act as a breaker block for us to run down into these lows, potentially here, and like I said, maybe down here as well. So let's just get that drawn out as a breaker. Very nice setup there. But again, depending on how Monday and Tuesday trade, you know, my biases can very easily and very quickly change. Another thing to take note of, fair value gap coupled with a breaker. That's a very high probability trade execute setup as well. So I'm definitely going to keep my eyes on this. And another thing to take note of, moving in onto Monday, be cautious in that Monday may be very consolidated. It may be very quiet, purely because Tuesday, Wednesday, Thursday, Friday is when all the big news is happening. So that's everything on dollar. Here's last week, as you can see. Very crazy. We traded lower, creating the low on a Tuesday, traded higher on Wednesday, and then, you know, a lot of back and forth price action. We pulled back into the range, traded into a breaker. Nice break out here, but then price fails to take out these highs. Swept it just about on the Friday with an aggressive trade lower. So yeah, that's everything on dollar. Now let's go on to GBP. So we're going to start on the monthly on GBP. And I will put up the seasonal tendencies for GBP as well. You can access these in the Discord, guys. Make sure to join the Discord. And if you've been watching my videos, you'll know that I wanted to see this monthly fair value gap get traded to last month. But you can see that price failed to do so. And now that we've started March, again, if we're expecting some lower movement on dollar, what does that mean for GBP? We should expect some kind of higher movement on GBP. So I'm just going to mark out a few things on GBP of where it could draw to on the upside. We do have these relative equal highs here and here on the monthly. So we have buy stops residing above there. We can call that relative equal highs, REL. And I'm just going to put monthly as well, because we can see those on a monthly level, meaning that, again, there should be a lot of buy stops residing above there. So we'll get that drawn out like so. And then I'm also going to mark out the midpoint of this long wick. When you see long wicks like this, guys, always draw the midpoint out, because price will trade to it, and it really helps to frame, okay, is price going to continue higher and take out the high, or is it going to respect it and turn around? Because what you'll find, if price is going straight through it, it may gap through it, come back down, find support, and trade higher. And this is on all time frames. So that's something to take note of. And we do have a fair value gap up here. But again, it really depends on how dollar wants to trade, and with everything that's going on in the world right now, I wouldn't be surprised if it caught us off guard. But let's just get that consequent encroachment marked out on the monthly consequent encroachment. If price does want to reach up there, it doesn't have to, but we know that it can, and it's on our charts if it does. In terms of sell side, so in terms of below the market, what do we see? We have a clear fair value gap imbalance right here. It would be nice to see if price can manage to finally trade into that. So we'll get that delineated as monthly fair value gap. Ooh. Like so. And then obviously we have last month's low and December's low that would have sell stops residing below it, which is completely fine. So now let's go down to the weekly. So you can see that we had a up close week last week, the previous week, and then last week we had a down close, but you can see price fails to take out any lows. So there is a level of bullishness that is getting presented to us right now. Another thing to take note of, if you look at this bullish order block and we look at the midpoint, you'll see our price is, yes, it's wicking below it, but we're finding support at that 50% level. This isn't ideal if you wanted to see lower prices. So again, these are all suggesting price may want to trade higher. If that's the case, we should be anticipating an up close week. which means that we want to see some kind of low get made and then us run into some kind of target and buy side liquidity. Now, the GBP is very ugly. Since December, it's been very ugly. You can see it's not very clean. We obviously have those buy stops on the monthly above these highs. Whether price will reach up there is another question. But yeah, let's just try and see what we can do. We do have a fair value gap down here, which should act as an inversion fair value gap and should provide support. Why should this be providing support? Because we've traded through it on the downside and then on the upside and closed above it. We wicked through it, traded back through it again. So this has been traded through quite a few times, but overall we've traded higher off of it, meaning that it should continue to provide support. In terms of targets, we can look for last week's high to be traded to with a potential reach above these highs. Now, as far as I'm concerned, if price is going to reach for these highs, it's probably going to go for the monthly relative equal highs. Like, it's not just going to take out this high or this high, it'll probably trade right through it. And because of that, I am going to mark out the midpoint of this massive wick as a potential target for buy side moving into the new week. So we'll get that marked out like so. And then we know that that is our weekly consequent encroachment, and we'll see how price treats that in the new week. Like I said, if price trades through it and finds support at it, it means that price will likely want to continue higher. But other than that, I'd like to think that we can find some kind of resistance. In terms of sell side and sell side targets, obviously we have this massive monthly fair value gap to reach for and relatively closed below here. So I don't really need to get those marked out on the weekly. Let's go to the daily, and you'll see our price is showing support for bullish PD arrays. For example, this low here fails to take out this low. This bullish order block here is connected to this bullish order block, and you can see on Friday we traded down into this bullish order block and had a nice reaction off it. So I wouldn't be surprised again if we had a continuation with a run for last week's high created, the other week's high created on the Thursday, where there's going to be buy stops residing. So let's just get that marked out. But again, guys, these charts are disgusting. You don't understand how difficult I'm finding this. So we traded down, bullish order block. There's that inversion fair value gap. We need to see how price treats that moving into the new day. Again, Monday might be quiet, but if dollar wants to continue lower, we know that we can start looking for longs with a target of this buy side liquidity and to that weekly consequent encroachment we were talking about. Let's go to the 4 hour, and you'll see our price actually closed inside of that fair value gap. Not ideal. We do have a bullish order block here, and it is going to act as a breaker the same way that order block on dollar here that we drew out. High, low, higher, high is going to be, this green candle is going to act as a breaker. So we can look at that in the same nature, because we have a low, we have a high, we have a low, and we traded higher, right? Meaning that this last down close candle before the up move should provide breaker behavior. So we can draw the high of that out, and that may form some setups. I'm not saying it's going to form setups, guys, but it should, and it very well can. You'll also see that this wick traded down into a breaker from over here. We've got a low, a high, a low, and price very, very, very ugly made its way above this high. So we look at the last up close candle, and you'll see our price traded nicely down into that on the Friday. So these are all things to consider, but overall I am going to look at this to see how price treats that level. Let's go to the hourly, and you can see price very may well get there quite quickly, but we need to see how price overall treats it. And does it say I want to trade higher? Are we going to see a reaction off it? Is it going to want to start running for these highs? And like I said, we've got relative equal highs with buy side liquidity above there, and again that weekly consequent encroachment. Furthermore, on the 4 hour, if we go back to the 4 hour, you'll see we have a massive bearish order block, not a massive one, sorry, we have a bearish order block up here, a part of this liquidity void. Now this liquidity void hasn't been completely filled in yet, so we can anticipate that getting filled if dollar wants to move lower. If that's the case, we can look at this bearish order block, which is lined up with the consequent encroachment to be traded to. So again, we have buy side targets to reach for, but if we see a clear break in market structure and willingness to want to go lower, we know that these lows here, and here are going to get targeted, and we have this huge monthly fair value gap. So it's nice when we have both sides like this, although sometimes it's nice when you have both sides marked out like that, but it also shows how consolidated current market conditions are. Finally, we're going to finish on Euro USD. We're going to start on the monthly as well. Let's take a look. So again, same thing as Euro and dollar. So in terms of Euro, I did want to see lower Euro. Euro did trade down into this fair value gap and close it, right? So we've rebalanced this range. So Euro trading higher it's not surprising. it's almost justified because we've came down, filled a imbalance below market price, as in a discount in the range that we're currently in. So now it should be looking for some kind of bullish PD arrays. On the monthly, you can't really see much, but I am going to mark out last month's high. So, February's high, because price may want to draw to that. And then we do have a rejection block level up here, but I'm not going to bother mark that out just because of, we'll go down to the weekly though, and you'll see that February's high is lined up with this high quite nicely, relative equal highs right there. Implied fair value gap, I'll show you, just above there, right here. This is our implied fair value gap. So price may want to draw to that on the weekly. So I'm going to get that drawn out in blue. We don't want a middle line. And I'm just going to write weekly implied. Fair value gap, that's fine. So again, price may want to draw into that, and then we have a bearish order block as well. So in terms of the upside, price can trade higher. We've got a weekly implied fair value gap and a bearish order block, which lines up with the high of that. If price wants to overshoot the implied fair value gap, then we would then look for the opening of that bearish order block, where we also have another weekly implied fair value gap right here. So technically, this whole range from this low, from this candle's this candle's open to this candle's open, is an implied fair value gap, this whole range. So I am going to, again, this is something I'm still studying, but I am going to watch how price trades through it and makes its way through those levels, depending again on how dollar wants to act. You can see we traded lower into a breaker high, got a low, a high, a lower low, and price is broken to the upside. What do we look at? We look at this swing, and you can see our price came down beautifully, touched that, and look at the reaction on Friday we had. So we can anticipate some kind of continuation with, again, that implied fair value gap up here and the swing high up there, which takes us to that bearish order block I was talking about. Another thing to take note of, remember on the weekly I just showed you and said this is a implied fair value gap. Well, when we drop down to the daily, you can see what between this low and this high, a fair value gap. So this is where, you know, the algorithmic and coding like that's basically code, isn't it? We just saw something on the weekly, you know, based off the weekly, we managed to understand that this is a fair value gap, and then on the daily it appears. So yeah, that's just something to take note of and study. We have a bullish order block here. This can get reclaimed. What do I mean by that? I mean that price may want to trade back into this. Like price may come back down into it, and we can get a bullish reaction off of it to trade higher. So we can take that into consideration when dropping down to the lower time frames. But overall, higher prices should be quite smooth. I say smooth on the euro, just because I can clearly see a fair value gap up here that will get retraded to the fair value gap, the implied fair value gaps on the weekly here, and this massive bearish order block as well, which may get traded to, and consolidation. Let's go to the 4 hour. You see, remember, I just drew out that this is a reclaimed order block. It's not reclaimed yet, but we anticipate it being reclaimed. So let's put anticipated reclaimed order block, just so that we know when price trades back down into this level, we can start to potentially look for longs depending on what dollar's doing. Remember, it's all dependent on the dollar and what dollar wants to show us. But yeah, at least we have that marked out as a potential you know, setup for opportunities. Again, probably gonna wait for Tuesday or Wednesday before even thinking about trading, with Thursday and Friday being my preferred days. So we have these relative equal highs above here and here for price to shoot for. Fair value gap down here on the 4 hour. With that anticipated reclaim bullish order block, we can go to the hourly. You can see how disgusting last week was. We came lower, higher, lower, higher. But one thing to take note of is price is respecting these lows. So as far as I'm concerned, if price wanted to go lower, this low should have taken it and we should have moved lower, but we didn't. We saw a bullish reaction away from it, trading higher, with dollar also doing the same. So that's what is keeping me kind of understanding that price is going to want to draw to the upside. Again, all these highs, there's going to be a lot of buy stocks residing above there. So it's going to be interesting to see how price trades in the new week. So yeah, also that reclaimed order block lines up with a breaker again on the low time frame, low, high, lower low. What's that last up close candle? That last up close candle is a breaker. So when price comes down into there, we want to see, does it treat it the way we want to? What does that mean? I want to see a reaction. I want to see bullishness come off of it for us to start looking for setups with the expectation to potentially reach for this buy side liquidity. So I hope, guys, this was a long video. I hope that makes sense. I hope you've learned something. If you have any comments or questions, please drop them in the comment section. Join the Discord. I am active in there. And yeah, I'll catch you tomorrow. Although if tomorrow is stupidly quiet, as in if it is very consolidated, I probably won't post. But Tuesday, Wednesday, Thursday, you know where to find me. Thanks for watching, guys. Smash subscribe and I'll catch you in the next one. Peace. What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well. And yeah, let's get straight into things. So yesterday I didn't bother make a video purely because everything that I stated in my weekly review that I made on Sunday pretty much remains the same. You can see I was just slowly trickling our way down throughout this week. I don't expect much movement until Thursday and Friday realistically, but we did have high impact news today that did cause a little bit of movement, and I did manage to get in on 2 executions on GBP, so you can definitely go and check those videos out. But yeah, here's Tuesday's trading, and again I still have my eyes set on this implied fair value gap from the weekly. So let me just go back to the weekly just to show you. This is an implied fair value gap, and I was saying how I wouldn't be surprised if price wanted to trade into here before we saw some kind of reaction. Now don't get me wrong, I did also state that this breaker could get traded to, however that has not happened yet, and we are just pretty much staying in this very consolidated behavior. I'm still waiting for significant, you know, movement in one direction. But here's the 4 hour. You can see we traded lower, taking out stops here and here, but I do believe these lows are likely going to get taken moving into the Wednesday. So when price creates big dips like this, and you can see like it's creating relative equal lows, so I do believe it's creating the illusion of support for retail. So I wouldn't be surprised if moving into the new day on Wednesday we saw some more lower pricing as we move towards this implied fair value gap and that monthly bullish order block open. Let me just show you that monthly order block as well, in case you haven't seen Sunday's video, which I highly suggest you go and watch. So here is again implied fair value gap on the monthly, and you can see the open of that. So that's going down here. Basically is what I'm saying is there's going to be very sensitive price action, especially below this low. So I am looking for this low to potentially get traded to. Let's go to the 1 hour, and you'll see I have the daily dividers. So Monday, as I anticipated, very quiet, classic back and forth price action. And then Tuesday we had a nice expansion at that 10 a.m. news, running below Monday's low, and then we just retraced off of that now. So as I was saying, moving into Wednesday, we can start looking at this swing low as a target for sell side liquidity. And the reason I'm expecting continued downside movement is because I do think we're still in the Judas swing part of the week. And what I mean by that is that we're still in the manipulation phase, as in I'm expecting downwards movement before we see some kind of reversal, which we might witness on Wednesday or Thursday. So overall, again, Wednesday I would like to see Tuesday's low get taken, and I'd like to think that we can start to move towards this sell side liquidity from this low, so that we can trade into that weekly implied fair value gap that I just showed you guys. After that, then I'll start considering looking for higher prices. You can see relative equal highs starting to form above here. The fact that Tuesday fails to take out this high from Monday again says a lot. We're likely, you know, it's likely leaving these highs untouched because we're going to come and grab it later. So that's something to anticipate. And again, we've got a fair value gap up here that price may want to return to, but overall I don't expect us to trade back up here until we see another, you know, set of sell side liquidity get taken. So what I am going to do is I'm going to move this sell side liquidity right across, just so that you can see we have relative equal lows here and here that have now formed. So there's going to be a lot of sell stops below here. Smart money is going to want to accumulate those sell stops to buy into, for us to then trade higher and release them, you know, in imbalances and above swing highs, assuming we do want to trade higher on dollar. Now don't get me wrong, these environments are not the best, but we do have non-farm payroll, which usually does a lot in the markets. So I'll be looking forward to seeing how that happens. But yeah, really not much to anticipate. Let me just get my Wednesday delineated like so. And I'm just going to keep my eye on this low. I want to see how price acts after we trade below this. Do we have a nice reaction off of this fair value gap? And if so, we can start looking and thinking about setups on Thursday and Friday for longs into the buy side liquidity that is forming above here. And again, this imbalance right here. So I hope that all makes sense. Again, another thing to take note of, I want to go into a little bit more detail. You can see our price broke lower, and then from from about 11 o'clock, which retraced higher, completely filling in this fair value gap. So when we see this, we can call this a balanced price range. So from this low to this high, we can drag that out, and you can see we've nearly completely filled that in. The fact that we've done this, price is likely going to leave this. So moving to the new day, we can watch how price treats this box, and if we trade lower, we can expect to find resistance for us to push lower, of course, for us to then grab those sell stops. After that, if we do return back to this, we need to watch how does price trade through it. Do we find support, and does it want to use it to springboard higher? So that is something to take note of for sure. But right now, I can see that price is just trying to fill this, well, it pretty much has filled this price range in. So I wouldn't be surprised if we saw continued consolidation before leaving it, and then again trading through it on the upside. So I'll definitely keep an eye on this and be referring to this in later videos this week. You guys might want to have this drawn out as well, so I'm just going to drag that out into the new day, and I'm also going to mark out the midpoint, because you can see how price, again, look at how price is treating that midpoint, so you can use it to kind of stage how the delivery is going to be, assuming we are going to dig deeper on the Wednesday. So that's my expectations on dollar. Let's now go on to GBP USD. So GBP is what I was trading today. What's nice to see on GBP is the fact that in the weekly review, again, I suggest you go and watch it if you haven't. I did mark out the 50% level of this wick, and I was stating that price will likely want to, refer to that. And you can see that today on Tuesday, price traded up into that. So let's just go down to Tuesday on the daily, and you can see our price traded right up to that consequent encroachment off that weekly wick I was just showing you, and that's also where I let off most of my positions. So moving into the new day, again, if we're expecting lower dollar, we should anticipate some kind of higher movement on GBP. Now on the daily, you can see there is a rejection block level right here, so price may want to touch into that, and then also we have this longer wick as well, where the 50% level of that can be considered, but that can very easily and very well may get bypassed. So I'm going to get these levels marked out so that we can see them on the lower time frame, and then let's go to the 4 hour. Now these purple lines are delineating the Asian range from Monday, and on the lower time frame it'll be a lot more clear. But again, there's that 50% level I was talking about from the daily, and you'll see that rejection block level from the daily also lines up with this bearish order block. So again, moving into the new day, price very may well want to continue higher. Definitely going to watch how we treat this level. If we find support, price will likely want to push, take out Tuesday's high, and then I'd like to think that we can turn around at this bearish order block up here. Let's go down to the 1 hour, and you'll see I've got the days delineated. Again, here's that Asian range. We came lower, and this is what I traded on PMI, right up hitting the consequent encroachment, and then we just came off of it now. So again, just like dollar but inverted, I think that we'd continue to consolidate, and then moving to the new day, more higher prices, running out Tuesday's high before we see some kind of reversal. Again, the highest I'd like to think that price can turn around over here. This is the bearish order block for this huge move down here, so it should be highly sensitive, and this is a consolidation. It's very classic for price to return to a consolidation, and you could even argue that we have a breaker here. We have a high, we have a low, we have a high, and then price is distributed to the downside. So if we drag out this down close candle right the way through, right into where we are now, crazy. I'm going to make it blue, and I'm going to take out the midpoint. We can watch how price trades into that in the new day, assuming it does, and anticipate some kind of reversal. If it trades through it, so be it, and we can start looking for these highs with a potential reach up to the monthly relative equal highs. But preferably, I'd like to think that once you reach this level, we'll see some kind of reversal behavior. The reason I have this Asian range marked out is because it should continue to provide support. We've traded on the downside and then on the upside, so it acts as like a buffer zone. So even though this Asian range is from Monday, moving into the Wednesday, we can still have this Asian range and look at it to provide us the support it needs for price. So as we dip into it, we have order blocks here, we have mitigation blocks here, this swing high, for example, where we should find continued support to push higher. Let's go down to the 15 minute. Let's get rid of that. And again, you'll see how price has found support. This is where I entered my position, found support on the Asian range before trading higher during PMI. Retrace. What is this? Balanced price range, guys. It's because we've completely filled it in now. So we can expect price to want to leave that price range, create some kind of sweep, and then see what happens. So yeah, not really too much. but definitely keep an eye on this level. Remember that dash level is the midpoint of Tuesday's wick, sorry. So I've got the midpoint of Tuesday's wick marked out. So moving into Wednesday, when price trades around this, it's likely we'll either find support on it to trade higher, or we'll find resistance, but preferably support, assuming we are going to run into Tuesday's high and into that breaker I was just showing you guys. So that's my expectations on pound. Continued higher prices before we see the reversal of the week, again running into the Thursday, Friday high impact news. Let's go on to Euro USD just to finish off. We'll go and start on the weekly again. Now I didn't really pay attention to Euro today, to be honest. But again, we haven't even created a low on Euro yet. You can see we're kind of just pushing higher. I brought our attention to these weekly implied fair value gaps on Sunday's video, guys. If you haven't watched it, go and watch it. But again, price may want to reach into that. There's some buy side liquidity above these highs here and here. If we drop down to the daily, it'll become a lot more clear. So we've got relative highs above here and here. I do believe Wednesday, again, if I'm expecting lower dollar, we should anticipate a continued push on Euro to run into that implied fair value gap. Now, if we go to the 4 hour, Euro hasn't been the cleanest either. You can see we expanded higher, ran out these stops. But again, bullish PDA rates are continuing to be respected. And what I mean by that is we have a bullish order block right here. And you can see how we've wicked down into it on a 4 hour basis. So long as this continues to provide support, as in moving into the Wednesday, I'm happy to remain bullish with an expectation to run for Thursday's high from last week and potentially into that buy side liquidity. Now, all of this is very messy, which is why I don't really want to get too involved. You can see a fair value gap here. This should act as an implied inversion fair value gap, downside, upside, downside delivery. So we anticipate resistance. So yeah, moving in onto the Wednesday, if this makes sense. You can see I got my daily dividers. There's that order block I was talking about. I'd like to think we can see continued support for higher prices running out Tuesday's high into the buy side liquidity, and then we get some kind of resistance. Here is Euro. We have high impact news at 2 a.m. tomorrow, which is the start of the London session. Again, something to consider. But yeah, preferably I wouldn't want to see any lows get taken out. I just want to see continued support, really, because you can see our price is just pushing higher. And remember, this is the start of the week, so the price is going to push in the opposite direction to what we expect it to expand in, especially with something like non-farm payroll closely edging in. So again, what do we have? We have a balanced price range from here right up to here during PMI, took out these highs, filled in the balanced price range, and we've had a nice little break in market structure, so I wouldn't be surprised if we saw a continuation to the upside. Moving into 2 a.m, we might see a nice little setup for Euro. Last time I tried to trade high impact Euro news, it didn't go so well. I mean, I got in, but it wasn't as clean as I wanted. But I'll be up for the London session to see what we can see. If a setup forms, then we can go long, expecting again Tuesday's high to get taken with a potential reach for the buy side liquidity. But we also do have high impact news at 10 a.m. again as well. So tomorrow should be quite interesting. I think tomorrow we'll see a lot more price action, and guys, don't stress too much, because these conditions are very ugly. I haven't seen it like this since like December. This is probably worse than December was for me. But yeah, it's just a waiting game. What am I waiting for? I'm waiting for clear expansion. Yes, we had this, but the way that we're retracing and filling in, rebalancing certain price ranges, it's not as clean as I want it to be. So I just want to see, can we continue to find support up into the buy side before I start thinking about any kind of shorts or reversals. So that's going to be everything for me. I hope that all made sense. Again, just watch the balanced price range, see how price treats them. Anticipate sell stops to be getting taken, because right now price is pushing lower. We have this monthly bullish order block open plus an implied fair value gap down here on dollar. So that's where I'd want to see the turnaround for the week happen. So yeah, that's pretty much going to be everything, guys. Hope you found this insightful. Don't forget to drop a comment, smash subscribe, and also join the Discord. Peace. What's going on, guys? It's GBP baby. Welcome back to another video. Hope everybody's doing well. And yeah, let's get straight into things. So I'm going to start on the monthly on dollar. The reason I'm doing this is because I've cleared my charts, so I just want to get everything marked out that I was explaining in yesterday's video. So we had the opening of this bullish order block that I wanted to see get traded to, and you'll see that this week today on Tuesday we did trade, Wednesday, wow, we did trade into that very nicely, and we've also traded down to the 50% level of this weekly wick as well, which is nice to see. So price is going exactly as planned, which is always good to see. As we drop down to the lower time frame, we'll start to get a better look, but I also want to bring our attention to the implied fair value gap, which is right here. If you remember yesterday's video, I believe it was blue, there was an implied fair value gap that I wanted to see us get traded into, and that's exactly what we witnessed today. So here's the daily, here's Wednesday's price action. We traded lower, taking out this low just as anticipated. So we traded down into that sell side liquidity below there, running down into the implied fair value gap, which is that blue box, and then through into that monthly bullish order block open, which is this level here. Let me just get that marked out. Like so. And then we traded down to that consequent encroachment. So moving into the new day, what I want to see is I want to see us start to move away from this bullish order block open, preferably. Now the reason for this is because we are going into Thursday, which means that we've got Thursday and Friday with non-farm payroll, and I think tomorrow, what do we have tomorrow? We've got high impact news tomorrow and Friday. So I'm expecting the reversals to start to form tomorrow, basically is what I'm saying, because preferably I'd like to think that we can trade higher and start running for some relative equal highs. Now before we go to the low time frame, I do want to make it clear, if price say fails and does trade aggressively lower and runs for these stops, if that's the case, then I'll start looking at this imbalance as a drawn liquidity. But preferably I would like to think that we can start to see some bullish price action in the new day. So let's go to the 4 hour, and you can see our price delivered beautifully to the downside, running into that monthly bullish order block just as we anticipated, which was great. And then we've just hit that consequent encroachment level. Now I do think that price is going to come down one more time to take out this low, as in I don't think we've finished yet. So I am going to be watching and anticipating price to take out this low one more time. Where do I want to see it trade to? Well, we have a nice 4 hour bullish order block right here, so I'm going to get that delineated like so. And when price takes out this low, I'd like to think that it can trade into this, and then we'd start to get a reaction away. So moving into the new day, maybe around the London session in the morning, I'd like to think that the Judas swing can get created, taking out this low and running towards this bullish order block where I'd anticipate seeing a strong reaction. If we don't get a strong reaction off of it, then like I said, we can start thinking about a potential drawdown into this vacuum block right here. Why is it a vacuum block? Because there's a lack of trade in here. There is no trading that happened between these 2 points. So price may want to draw down into that, but preferably I'd like to think that this 4 hour order block will provide enough of a reaction for us to start hunting for buying opportunities. So let's go to the 1 hour. Again, you can see our price made its way down. 7 o'clock we traded higher, slightly higher, and then we broke down, running right into that implied fair value gap and monthly open. Seeing price come up like this is very typical, and this is what's going to drive a lot of traders crazy, because they're going to think that it's reversed. And don't get me wrong, it looks like it would have, but I'm telling you, and I'm expecting, this low is probably going to get taken. Like, if I was the market, I wouldn't leave this low just intact like that. I'd like to come down one more time and then trade higher, if anything. So what am I looking for in the new day? Well, we're trading to the monthly bullish order block open. Now I'm going to be watching this 4 hour bullish order block. So let's just write that out just so that we know that that's that level. And I'm going to make this a blue line. So I want to see how price acts until there. So until price reaches down here, I'm not really going to be looking for any kind of setups, as this is where I'm anticipating price to trade before we do trade higher. Now don't get me wrong, we could find support within this implied fair value gap and trade higher. If that's the case, so be it, and that would mean that there's a lot of strength on dollar. However, I highly doubt that's going to be the case, and I do think we're likely going to run out Wednesday's low and start looking at that 4 hour bullish order block. So that's everything on dollar. Pretty simple. We can see again we've got relative equal highs. I think I drew our attention to these highs previously as well. There's some buy side liquidity resting above here, so that's what I'd see as a target, assuming we do get a bullish reaction and we see a change in the state of delivery. So that's what I'd be looking at for buy side targets. But yeah, obviously we're gonna have to wait and see. Let's now go on to GBP USD. I'm also going to clear everything here. Now GBP isn't very clear, and I say that because again we're trading into this very heavily wicked environment, which is not ideal. So you see we traded it up into this wick, this rejection level. We traded in there and then we've just reacted off of it. Again, moving into the new day, if I'm expecting lower dollar, that means I should expect some higher pound as well. So pound may want to trade back into this level. We have a bearish order block on the 4 hour right here that you can see we're reacting off of. So again, I'm watching to see how price is responding to it. I wouldn't be surprised if pound wanted to trade back into this order block one more time before turning around. And again, we might witness some kind of divergence, as in pound may fail to make a higher high, whereas euro, let me start again. Pound may fail to make a higher high, whereas dollar may make a lower low. So this is something to consider. But generally speaking, I'll be watching to see how pound returns back into this range before I see significant displacement. Because what I'm looking for now and anticipating and waiting for is displacement to the downside. I want to see real displacement for me to start thinking about shorts. I'm running into yesterday's lows. So obviously Wednesday's low, which is here, Tuesday's low, which is here. And then we have some relative equal lows on all the way down here as well. So preferably that's what I'd like to see. But again, we'll have to see what London offers us. But we had a pretty solid day today. We traded higher just as anticipated. Took out these highs, which is nice to see. But like I said, on the daily, pound just isn't clean right now. As in, it's not clean to look at. But the fact that we're remaining within this wick, which is a rejection block, is good. Like, I'm happy that we didn't fill it in. For example, we pretty much just traded to the 50% level. Slightly overshot it, very slightly. But we traded away from it. So once price touches it again, that would be my signal for me to start thinking about potential shorts for the week. On the 4 hour, again, this is the bearish order block, which pretty much lines up perfectly with that rejection block on the daily. Again, price is probably going to want to liaise around here for a bit before we see any kind of significant movement lower. Let's say price continues higher and trades above this high. If that is the case, then I will start looking at this high as a draw in liquidity. But again, I highly doubt that, as I do want to start seeing some strength in dollar once it assumingly takes out this low. Let's finish on euro. Now euro is a little bit more clean. We can start on the weekly on euro, and you'll see that on the weekly we have traded up into a bearish order block. This is the bearish order block in the weekly. I brought our attention to this, I believe, on in my weekly review on Sunday. If we go to the daily, you can see we traded up beautifully. There is a fair value gap here as well, so price returning to this is nothing new. Ran out relative equal highs here and here, just as anticipated. Very nice to see. And you'll also notice this daily bearish order block. Now, like I was saying on dollar, if I'm expecting dollar to take out Wednesday's low tomorrow, that means I should expect euro to take out euro's high. And if it's going to take out the high, the highest I'd want to see it trade is into this daily bearish order block right here. So I'm going to get that delineated. We'll make it a nice blue. And I'm going to keep my eyes set on that level in the new day. And again, this is where I'd anticipate some kind of divergence. So what do I mean by that? I mean that euro may make a higher high trading into this bearish order block. GBP may fail to make a higher high and only trade into the wick of Wednesday. And then dollar will make a lower low, trading down into that 4 hour bullish order block that we were talking about. And that would show divergence, as in, you know, smart money divergence. If it happens and if it plays out, obviously I'll speak about it in tomorrow's video and you guys can see exactly what I was talking about and how you could have gotten on the move. But yeah, we just have to wait and see, don't we? So yeah, we traded higher aggressively. I did scalp during London close. You can watch my video on there on my channel. After that execution, went pretty well. But yeah, I'm just going to be watching these highs again. I wouldn't be surprised if price wanted to retrace, run out those stops one last time before we see a significant displacement to the downside. Although we're falling, don't let this fool you, because this is one thing that I think I've learned more recently about price. Like, yes, we will turn around and it will retrace, but we shouldn't assume, you know, that we've had a significant break until we see a significant low get taken out, and that's not happening yet. Which is why I'm anticipating and wouldn't be surprised if price wanted to come up one more time, run out these stops, and then trade lower. So yeah, moving into the new day on euro specifically, we do have high impact news on euro as well tomorrow. Euro specifically, I'm looking at this for buy stops for us to start selling above, with the expectation to then move lower, running into some beautiful relative equal lows that we do have residing below here, offering us south side liquidity to sell into. So we have two targets, and I'd like to think that we can go up and then trade lower. Same way on dollar, I'd like to think that we can trade lower and then trade higher, running into these relative equal highs. So that is my expectations. I do believe this is a classic. If that's the case, that will be a classic Thursday reversal. And if that's going to happen, it will happen during the New York session. So if the reversal hasn't happened by New York, then we're probably going to be trading lower for the rest of the week. That's pretty much how it goes. So that's going to be everything, guys. I hope you found this insightful. Hope you learned something. Make sure to drop a comment. Join us on Discord. We're there. And I'll make sure to catch you tomorrow. Peace. What's going on, guys? It's GBP, baby. Welcome back to another video. I hope everybody's doing well. We've had some beautiful expansion today. Not quite the direction that we were anticipating based off yesterday's video, but nothing to be afraid of. We simply adapt and continue to excel. So as you can see, we're very bearish right now on dollar. Finally though, it's nice to see some movement. I feel like the charts are loosening up a little bit for the year. We've been held in consolidation quite a bit over the past over the Monday and January and February, but yeah, let's get straight into it. So we're trading very aggressively lower towards this bullish order block right here, and there is actually a very slight imbalance over here that I want to quickly bring our attention to. Very small, but when we drop down to a lower time frame, you'll see that there is, I think, a daily fair value gap below there as well, but there is a small imbalance right there that price is definitely going to want to draw into. So let's go to the daily, and you'll see that we gapped lower and traded aggressively lower, and you can see we're running down into this daily fair value gap. It's not even a fair value gap, sorry, it is a liquidity void, because it is void of any kind of trading whatsoever. So if you remember in yesterday's video, I did state that if we go lower than this low, then I'd be looking for this to get traded to, and that's exactly what we're witnessing happening here. Now, don't get me wrong, I was anticipating us to react to the 4-hour bullish order block that is right here, and I'll show you that when we drop to the 4-hour. But the fact that we traded through this said to me, okay, now let's start looking for this low, and we can potentially start looking at this consolidation and how price is going to make its way through that. But considering we only have Friday tomorrow with non-farm payroll, we still need to be quite wary. And when I say that, I mean that we could always still get a Friday reversal, which is crazy to think. But moving into tomorrow, I want to see us trade into this liquidity void, and I just want to see us fill it, to be honest. I'm not really sure. Let's go to the 4-hour. Again, this was that bullish order block I was speaking about. You can just drag that out like so, delineate that here. And I was saying when price trades to that, I'm going to be watching, does it provide support? And clearly not. We traded right through it. It's not stopping for nobody, and we're going down into that imbalance, which is nice to see. So let's drop down to the 1-hour, and you'll see our price has just been continuously falling. You can see how it made its way through that order block and left it. So yeah, I'm just watching to see what happens when we get to this imbalance. Are we going to fill it? If we do fill it, I wouldn't be surprised if we saw some kind of retracement off of it to trade higher. The reason for that is because we've been bearish all week. So right from Monday, Tuesday, Wednesday, Thursday, we've been bearish, right? So if, say, price does continue through this level, the next target will be these lows more than likely, in this imbalance right here. And it does seem like a stretch for price. I doubt it's done most of its moving on Wednesday and Thursday, which is why I'd like to think that Friday would get some kind of reversal, especially with non-farm payroll. But yeah, in terms of probability and things, it is much lower because it's not in line with what I originally wanted to see, which is not ideal. But generally speaking, not really much to look at. I'm just going to see how do we trade in this. If we see some kind of reversal forming, so we get a large strong reaction off of this imbalance, the liquidity void, sorry, if we get a large reaction away from it, I'd simply start looking for longs into this range with a potential to reach up here. If price, say, trades through it, and we find resistance at it, so it continues to trade lower, so be it. And if that's the case, I'd start looking for lower fair value gaps to get traded to, and potential lows below here where there's relative equal lows. It's really as simple as that. Like I said, Friday being the last trading day of the week, I doubt it's going to continue this heavily. It's been very, very heavy. So yeah, I doubt it's going to reach it. Don't get me wrong, we do have a clear weekly order block, fair value gap right here, and price will likely want to start aiming for that next week or moving into later March in general, which is why I was thinking we're likely going to react here. Also, there is this bullish order block. That's another thing to take note of. The fact that we have a bullish order block here, we should anticipate some kind of resistance anyway. So that's another reason I would like to think that price will just slow down as it finally reaches that liquidity void that we're seeing right here. But you never know, price could react strongly and we could, you know, zip right up back through the week, especially with non-farm payroll. But yeah, just something to be wary of. Another thing I want to bring our attention to is gold. Now, I did see gold has been rallying crazy, and I haven't been really following gold too much. But if we go to the weekly, you'll see that even last week gold was traded aggressively higher, and then we had a continuation this week. I didn't think to look at gold as I was looking at dollar. I probably should have, but the way we're seeing gold rally, it's no surprise that dollar is showing this heavy weakness this week. So that is definitely something to take note of, and something I'll probably be considering as we move into the next few weeks. But overall, what am I expecting? I'd just like to see us fill in this liquidity void. Again, I'm watching to see how price reacts, and I wouldn't be surprised if we saw some kind of bullish action, price action, to give us some kind of retracement back into these levels here, considering it's the end of the week. But we'll have to wait and see where price is at 8:30. For example, if price is still in this liquidity void at 8:30, then I'd anticipate some kind of reversal to trade higher. But if we traded through it by then I wouldn't be surprised if price wanted to reach deeper. But yeah, it's all just a waiting game really. Let's go to GBP USD. We'll start on the weekly, and of course with dollar falling so heavily lower, what do we see on GBP? We see us rallying higher. Now, we have traded into these relative equal highs. I did mention them once or twice, so we're just about to trade through those. Those are likely going to get traded to, and now I am watching this bearish order block right here on the weekly that we're clearly about to trade into. Specifically, I'm looking at the 50% level of this wick as well as potential target, so I'm going to get all of these things marked out, and I'd also be looking at the midpoint of this bearish order block in general. So I'm going to mark out the midpoint of this bearish order block, just because that's what we call mean threshold. Mean threshold is the midpoint of order blocks, and I'd like to think that price could potentially trade up to that. And then we also have mean threshold of this wick as well, but because it's a wick, we call it consequent encroachment. So these are two potential levels for price if we're going to continue as bullishly as we've seen price trading. And then we also have this buy side liquidity residing above this high, and these highs. So there is relative equal highs up here that are likely going to want to get targeted before we see some kind of reaction lower. So let's just drop down to the daily, and you can see very expansive day running right up towards those lows, highs. Here's the relative equal highs here and here, and as I was saying, price may want to run those stops to trade higher. And then we have a daily bearish order block at that 50% level as well. So price very well may just trade into that. This is the consequent encroachment from the weekly, right? So price may reach up to that if we continue with this heavy bullishness. If that's the case, that's fine. I can mark out the low of this bearish order block. I'll just show you on the daily bearish order block. I'll mark out the low, and price should react bullishly to that, since that is a daily level. So I'll get that marked out in black, and I'm just going to type bearish daily order block, and I'll put that on the right in the center. We know that this is the weekly consequent encroachment, and we'll put that on the right in the center, in the middle. And then we know that this is the buy side liquidity, because those are where the relative equal highs are residing. So now that we've got those targets marked out, in terms of downside, remember, we're likely, if we're going straight higher, price is going to need to pull back to some degree. We can look at this high here, because this up candle should now act as a breaker. Why? We have a low, a high, a low, low, and then price breaks lower. Now I'm looking at this high because volume closed the highest here. Yes, this wicks higher, but volume is closing the highest. So this is the most significant swing high. So I want to get this drawn out like so, and price may want to draw down to this. Now I doubt it's going to happen on Friday, but this level moving into the new week will likely be significant, and I'll talk more on that in Sunday before we go into the new week. But let's go to the 4 hour. Again, you can see that level lines up with that order block, which should now act bullishly. We have a fair value gap here that we may be able to draw into, but generally speaking, just as we're expecting dollar to trade deeper into this liquidity void, we want to see if GBP can reach into this buy side liquidity and potentially that daily bearish order block. In which case, once we do get a reversal, then I'll start looking at this fair value gap to get traded to, and then I'll start thinking about this swing high to be a point that price may want to trade to. There is no imbalance though on the 4-hour here, which is very clear. We have an imbalance here at the weekly consequent encroachment. So price may want to reach up to that, but again, it really depends how bullish pound is. So tomorrow is going to be interesting to say the least. Let's go to the 1 hour. Price has been continuously making its way up. Remember, the buy side liquidity is up here. So again, since we're at the end of the day now, price will likely retrace, but I wouldn't be surprised if we saw a classic setup on London just to push us through that buy side liquidity before we see any kind of pullback. So I'm going to bring our attention to this to this fair value gap, and that's because there is a bullish order block here. I'd like to see this provide support into the buy side liquidity. I'll say that again. So we have a bullish order block here. If price manages to come back down here, I'd like to think that this will provide enough support to send us into the buy side liquidity. Why? Price shouldn't need to come all the way down here yet. It will come here later. So I'm watching this fair value gap, specifically this bullish order block. So we'll see how price treats that in the new day. Again, that might create the low of tomorrow maybe to trade higher. We'll have to wait and see. But yeah, it really depends where price is for non-farm payroll. So like I said, 8 o'clock, I'll probably be in the charts. Make sure to join the Discord because I'll be happy to talk live there. But I'm going to be waiting. I'll be looking to see where price is. Excuse me. I'll be looking to see where price is at 8:30. If we're again above the buy side liquidity and we're getting some kind of bullish reaction on dollar, then I'll start thinking about shorts to trade lower. So yeah, very interesting days. Let's go to Euro to finish off as per usual. We'll start on the weekly. Now Euro's rallying again into this bearish order block on the weekly. There is an imbalance right here, fair value gap, so price is going to want to draw to that. Again, is it going to do it this week? Probably not. It's probably not going to do that this week. We do have 50% of this wick which may get traded to. That is something to consider. Consequent encroachment, so we'll get that marked out in red. And then we can go to the daily and you'll see price has closed above this swing high, which is significant to me for us then to move higher and again start trading up towards these levels. Now it depends how bullish price is. I doubt Friday is going to reach up there. It can do it, especially with non-farm payroll. I don't want to be too specific purely because I'm not too confident right now, but one thing to take note of, there is a inversion fair value gap now. So this was a fair value gap on the downside. We traded through it and closed on the upside. So when price comes back down to this level, we can anticipate support to be found there. Let's go to the 4 hour, see if we can see anything. Again, very consolidated price action. So if price is going to go anywhere, it will go above it to the fair value gap that we marked out on the weekly. It will likely go there, and like I said, it depends if price has the power to do that tomorrow, but I wouldn't put it past it. I would not be the slightest bit surprised. So that's what I'm looking at this level. If we come down here and we get a nice bullish reaction off of it, we can start looking for longs, in which case I'd target there. But yeah, sorry guys, this video hasn't been very specific. You can see again, bullish order block. I'd like to think it provides support moving into the new day. So specifically, I'm watching this level tomorrow. How are we treating that? Do we want more bullish price action, or are we going to start pulling back into the range? And again, it depends where we are at 8 o'clock running into 8:30, where we have non-farm payroll. So yeah, that's going to be everything, guys. I hope that was insightful. I hope that made sense. Crazy day today. And yeah, let's keep moving. Don't forget to join the Discord. Don't forget to smash subscribe. Don't forget to hit like as well. And I'll catch you in the next one. Peace.